Happy December, everyone. I hope you all had a wonderful Thanksgiving time with your family and friends. In today's video, we're wrapping up everything important from November and looking ahead to prepare for December. Let's get started. Looking at the key indices, November was a fantastic month for the Russell 2000, which gained 11% compared to the S&P 500 and the Nasdaq, which rose by 6%. Just take a moment to realize that in November alone, your money outperformed what any money market fund delivers over an entire year. Take a look at the different sectors. Leading the pack is XLY thanks to Tesla's strong performance, which pushed the sector up by nearly 13% in November. On the other hand, the healthcare sector barely managed to stay positive, indicating challenging times ahead for this space. In the crypto world, it was a stellar month for the two major currencies. Bitcoin surged by 38%, while Ethereum soared by 46%. Unlike Bitcoin, Ethereum has yet to reach its all-time high. I'd like to remind you of the technical cup and handle pattern forming for Ethereum, which could very well signal a potential surge of dozens of percentage points in the coming weeks. Natural gas is up 24% and leads the commodities, while all other commodities are underperforming. The Magnificent Seven were led by two stocks mainly this month. Tesla had an amazing month with a 38% increase. Simply crazy, of course, due to Trump being elected president and Elon being close to him. Amazon rose by 11% and has a technical setup for much more in December, while the rest of the stocks had rather mediocre performances. This month, the S&P 500 has once again broken the all-time high record, marking the 53rd time this year that the index has closed at an all-time high. I believe the final record high of the year is still ahead of us. The PCE, the Fed's preferred inflation gauge, was released this week. It aligned with expectations, though the core reading was slightly higher. However, we didn't see any significant market impact. The Fed will continue to cut rates in December, but the outlook for next year remains uncertain. Next week, we're kicking off an inspiring earnings week featuring companies like Salesforce, Okta, SentinelOne, Lululemon, and more. A packed week of exciting reports awaits us. And as always, you can catch quick and focused analyses of select reports right here on the channel. After wrapping up November, our eyes are set on December, which will close out a solid year in the stock market. All the experts are discussing a green December, and I'm with them. I want to show you why this month will likely be green while addressing some concerns or uncertainties in the coming days. Let's start with the first statistic. Since 1950, December is the second best month during election years, right after November. In election years, December has ended positively in 83% of cases, with an average gain of 1.3% in the S&P 500. And since we're in an election year, we have an excellent chance of finishing in the green. But what about regular years? In non-election years, December is still the third best month, only surpassed by April and November. So even in regular years, December typically ends positively. Friends, don't go anywhere and don't assume the entire month will be green, prompting you to cash out your savings. Stick with me, because we'll soon see that the first 2 weeks of the month tend to be more volatile. So hold off on getting too excited. Now, if we combine all years and data, what's the likelihood of December finishing as a green and positive month? 74.3%. You'll agree with me that it's not bad at all. The average potential monthly gain stands at 1.5%. Moreover, if you look at all months, you'll see that December has the highest likelihood of finishing positive compared to any other month of the year. Another important point I want to share is the institutional market's chase for decent returns throughout the year. At the end of the year, investment agents who haven't yet met their targets race to hit those goals by investing and buying much more in December than in any other month. So, what do we see here over the past 10 years when the S&P 500 started December with a year-to-date return of over 20%? Most of those Decembers ended in the green, with an average gain of 2.2%. Just 3 years ago, in 2021, December closed with an impressive 4.4% increase. But wait, I promised you some challenges in the first 2 weeks, so let's discuss them. The Financial Institute Almanac Trader tells us that while December typically leans towards stock buying, the first week of the month tends to be weaker. This is because portfolio managers sell stocks to generate cash for investments later in the month. According to the chart in the image, it's fair to say that the first 10 to 14 days of the month are likely to be volatile and not necessarily green. Afterward, according to the Research Institute, the holiday spirit takes over during the third week of December. Tax loss selling ends, and stock buying is in full swing, leading up to the peak of the Santa Claus Rally, with a particular emphasis on the Russell 2000. So what should you do? In my opinion, and this is not financial advice, separate your long-term portfolios, where you don't need to touch anything for years to come. For those trading daily or weekly, focus on the next 2 weeks with tight stop-loss orders and closely monitor market movements. You can always re-enter trades during the last 2 weeks of the month. That's it from me, friends. If you haven't subscribed to the channel yet, you're missing out on tons of valuable videos like this one, trading tips and company earnings analyses. So go ahead, give me a like and subscribe to the channel. See you soon.